Big relief rally on Wall Street. Stocks breaking a 6-session losing streak that has erased more than $2 trillion in value from the U.S. market. And as investors struggle to digest it all, the savvy investors are getting off the sidelines to snap up quality stocks at deep discounts. Our panel is back with the names to consider. We have Kimberly Foss from Empyrion Wealth Management, James Frischling, NewOak President, and David Dietze, Point View Wealth Management President. And I like all of your lists. Kimberly, I'm going to start with you. You've got Google, Gilead, and Disney. Why did you pick those, and which is your favorite?
Well, you know, we're broad-based investors, and we have everything in our portfolio, Melissa. But Google, you know, has been one of my personal favorites, too, for a long time. I bought it in 2009 in March, so back down there for my son's Roth IRA. And it's off its highs today. You know, Goldman Sachs just upgraded them. They're going to split their operations into Google proper, hopefully making more efficiency in their operations and more transparency, ultimately going higher, we believe.
Yeah. Jim, let me move on to you. You have two of my favorites in there, Disney, Exxon, and JetBlue. Disney, I think, has been so beaten down, and they have, you know, they paid what turned out to be a bargain for the Star Wars franchise, because that is absolutely exploding the revenue there. And Exxon, so beaten down, but they never go away, and we're never going to stop using energy. I love your choices.
And when asked what I thought was too beaten down, Disney has taken a bath, along with a lot of media companies, but particularly because of the issue with ESPN. But the world still wants great content. Disney has it. I tried to buy something from Miles for Tomorrowland for my nephew. Couldn't find it. Had to wait for it. Disney's content and characters are still impeccable. Studios doing well. Theme parks. And on the Exxon side, in 2008, they still raised their dividend. So I know oil is very difficult. I still think they're a great dividend player. The stock's down almost 27 or so percent, although I guess a little less today because of the turnaround, because of the bounce back. But this is a company that has the money and the free cash flow to continue to pay dividends. To me, it looks like a bargain. David Dietze, you've got Exxon in there as well. That is not a coincidence.
Yeah, absolutely. You know, buy when people are fearful, sell when they're greedy. People are fearful of the energy area, but you want to look for companies that absolutely are survivors. They have low debt, geographically unparalleled reach, and then, of course, operations-wise, upstream, downstream, chemicals. You've got everything. Plus, it's the only company that's still buying back stock at the same time it can honor its dividend. Walmart,
I mean, that's an interesting one, because Walmart, you know, they said in their most recent quarter that they've raised salaries for people, or hourly wages, and that's really weighing on them. I mean, they're always the subject of so much controversy. You still like Walmart? For great reasons. One is I love a bargain. It's down 30% from January. Second, we know what's going on in China. Things are getting cheaper, and they're one of the largest importers from China, so they can benefit from the lower import costs. Third, the situation you just cited, you know, is true. They're paying more to their employees, but it's not a dead loss. They're certainly going to get slightly better employees than if they had not raised those wages, and they get a little positive PR. And finally, of course, it's a company, the largest retailer on the globe. When the going gets tough, go with the largest, biggest, and so forth. And you pick Diageo because people always need alcohol. I mean, whether things are good or they're bad, you still go home and you're like, let's celebrate or let's drown our sorrows. Yeah, either way. Absolutely. People are digging in. You're going to use their product for this bull market or bear market. But what I like about Diageo is it's got 25% of the top liquor brands, 7 of the top 20 in particular. You cannot duplicate a Johnny Walker. You cannot duplicate a Guinness. So when people say just buy American because they are the best companies, I think Diageo, based in London, not so fast. It's an excellent company. It's down about 25% in the last year. So, Kimberly, but the question remains, what is cheap? Because I was talking to Wilbur Ross yesterday on this show, and he said he had his list of things that he wanted to get, and he had his price that he was going to strike at, and they didn't hit it. You know, even in the face of stocks dropping and dropping and dropping, he still didn't feel like they were cheap enough to execute. But he was guarding them enough he wouldn't tell us what they were, because he felt like they would get there and he's going to snap them up. But do you really feel like things are cheap? Well, I think that, you know, when you have the S&P, when you have the markets pulling back 12% in the last 2 days, you know, these are certainly buying opportunities, and this is where you need to add into your portfolio. I was running last night, Melissa, and my neighbor stopped me and asked, hey, you know, I've got a lot of money sitting on the sidelines, and I had been for about 5 years. Should I put it all in? I said, you know, I don't know if this is the bottom or not, but when you're off 12%, I certainly would take a portion of that, maybe a third of that, and go ahead and buy in. This is how wealth is created and made. I would not sit there on the sidelines
lines and try and wait and try and bottom pick, because that's really hard to do. You and I both know that.
No, it's really true. And it was the same thing. I can't tell you how many people have asked me, stopped me, emailed me in the past, week and said, should I get involved? Should I buy my favorites? And that really tells you what sentiment is like. People aren't as scared as it looks like. They're thinking, I've missed, and now maybe there's an opportunity. Thanks to all three of you for sharing your great ideas. We appreciate it.